Now, the S&P 500 and the Nasdaq 100 have been on a rip. They've been on a tear, but it's looking like things might have been topping out so far. So going into this week, we had PPI and CPI data show us really what's happening with inflation and the slowdown that's taking place there. But the real question is, can sellers actually step in? Because over the past few weeks, we've had some bad data. We've had maybe some drawdowns, but we've continued to push higher and higher, which is, we're clearly in an uptrend, right? You can clearly see that how we're trading here is, some would argue is unsustainable, but overall, you continue to push in that overall trend. And that's kind of how we're moving right now. So when we just really quickly take this off so you can see, you can really just see the strength in which we've been moving here on ES, on the NASDAQ, very clear structure to the upside. But I do think things could change in a hurry. Now, the first things I'm going to give you are going to be straight out of the news and what we're looking at. So Monday, I want to start off chronologically. Monday, you're going to have NVIDIA's GTC AI conference. That's going to be big. Just to let you know, this is basically the major part of NVIDIA that makes them all their money. The company's graphics processing unit technology event, which it's quickly become global AI conference for all developers. Okay, really important. Okay, NVIDIA stock and about volatility and resume its surge to more than 80% this year. It's a huge catalyst. It'll probably give more information, not only on the industry penetration, but also what's happening across the industry, right? Not just them, but everyone. So that's why today we see names like AMD, AVGO. We saw Micron get a price target raise. NVIDIA, not just the only one that's running. So these are things that you have to be looking at and getting a grasp of what's taking place. So that's going to be the beginning of the week. Important. We'll go over that here in a second. Then number two, you have the Fed meeting on Wednesday. And the Fed meeting is going to be important because it's going to give us more of an answer to what to expect with inflation. Now, you can argue based on some of these charts that we're now almost pricing out a rate cut in June. Very important to understand that. And, if we continue to push this, pause further and further back to when we actually start cutting rates, it's going to create more and more stress on the banking system, number one, because, rates, everything along those lines. Credit card defaults do continue to rise. They have been rising, although they're not at dangerous levels yet. They are rising. We're going to see home defaults rise as well. Now, again, these defaults are still very, very low in comparison to getting to like a 2008, a financial crisis type level. Nevertheless, it's still bad for the market. You've also seen GDP slow down dramatically in the expectation there, which the Fed kind of did warn us about as far as growth would slow, if not stall altogether. So definitely going to be the most important thing that's coming out there. Now, again, if you want to go look at those PPI and CPI readings. Now, again, I just wanted to jump here just quickly. If you look at what happened with PPI, it came in 0.3 expected on the headline to 0.6. That's not core, it's headline. And that was pretty terrible. I would say PPI affects more of me and you in the larger scheme than some of the other stuff because wholesale will ultimately come back down to businesses and ultimately back down to regular people. Very important to be thinking about that. And so you're not just seeing it just happening with rents and what's happening there with maybe even energy. You're seeing it kind of stem to everything once again. The last time we saw data like this, which again, your biggest move on PPI to the upside since September 2023, which if you go back, August, September is when the market started pulling back. So these are all very important things to think about. Now, I'm not saying you're going to have another September type pullback. Okay, I want to make that really clear. August, September is where you really started pulling back. I'm not saying that. However, this information has to be concerning. Now, one other step I want to take you through is going through the dollar and what's happening with yields. The dollar has been bouncing a little bit, but it's not that concerning overall. We can see some of our levels here of where you're established and how you're moving. It's not that concerning yet. Okay, this part I'm okay with. I could see this stalling out sooner than later. Now, this is the part that I don't like. This is your 30-year yield, and this is where things don't look great. Now, I would still be under the argument or the assumption you're still operating below your level here, 4.45, 4.47. That's big. You're also below your previous 2022 highs, also very big. So holding below those levels is going to be critical, crucial, everything you need to see there. Also, too, our broker link is down below. We just got sponsored by them slowly but surely. The link is down below. Check them out. But again, when we look at what's happening here on the 30-year yield, this is concerning because again, as you mount above 4.45, we've seen what happens to the market. Again, if you go back to when this happened, it was back in September of last year. So again, you're seeing similarities of what happened from September to possibly now. Now, I will say there are some other things that are taking place, like rate cuts are a lot closer than they were, 6, months ago, 5 months ago, or however long ago that was. So I don't want to say it's exactly the same. However, there's definitely some warning signs. I've been inherently very bullish up until this point, but I definitely think we can start hitting some speed bumps and start slowing down overall as we head into summer. But reminds me a lot too of last year. Just really quick, as we look at this, it's very important that we look at past circumstances and situations, because last year we kind of had some similar, issues, right? If you go back to March, you go back to, early April, we had some downside. Remember the banking crisis that took place in early March? And then you had some like stagnations going sideways for essentially, all the way into summer. From essentially end of March all the way into summer, you moved sideways, you didn't do anything. Now again, obviously we have a little bit more downside taking place here, but we have been moving sideways for the most part here over the past 2-3 weeks now. So very important that we're taking this into account, because in order to really get bearish, what do you have to do? You have to make lower lows, right? If a bull trend is clearly identified as making higher highs and higher lows like this, then a bear trend is clearly described as making lower lows and lower highs. So again, similar structure, just inverted completely. So again, you have to start breaking back down. So until we start breaking back down below, 504, 503 on SPY, I can't be that concerned overall, or I can't start flipping the bias as far as going and pushing shorts, but I can see some of the warning signs before we get there. And I do think those warning signs are now coming out. The one thing I do want to talk about, again, going into this week, is just preparing you for the week, right? Obviously, we're posting less videos here on the channel, but I want to get you prepared. Now, we're going to go into data here, but before I do so, I have to ask you to consider signing up for the newsletter. The link is down below. A lot of you guys ask what I think about specific stocks. Well, the newsletter can help you out tremendously. Every week we post our ideas and viewpoints on the indexes, our top stocks, the news calendar, everything in between, so you are ready. We're not selling you anything. It's all completely free. This comes out of our pocket. The link is down below. You'll go to this, you just type in your information, and it's really, really simple. You scroll down, boom, and you're in. But the one thing that I will tell you is if you decide to not open up your email, I promise you will be kicked out of the newsletter. Again, this is out of our pocket. So again, I want to only have people that are opening and active. So you'll actively be purged every other week if you do not open the email. Check your spam. That's usually where it'll be if you aren't receiving on your first go around. Now, going back into what's happening here. Okay, this is just data really quick. So this is specifically on SPY. I don't want to waste too much time on anything else. So SPY specifically, this is just showing your volume throughout the week. Mondays are typically your lowest, then Tuesday, Wednesday, Thursday, and you can see volume upticks throughout the week. As you get confidence, as you get direction, volume takes more of an effect, which takes place more near the end of the week. Very important to see that, right? So if I quickly go into SPY, just really showing you what's happening here with volume, it becomes really clear. Now today might not have been the best volume, but yeah, it was decent, right? Thursday was much better, but today was still pretty high. You'll see Thursdays and Fridays fluctuate sometimes, especially if we start to flip overall. But again, you can still see typically lower volume comes in on Mondays. Monday there. When we go to a previous Monday here, 76, and then, right here, 49 million, very low volume. So what does this tell us? You're not going to get these major moves in any direction, statistically speaking, on a Monday. Okay. Also, too, going into this, even though I don't like the way the market's moving, even though I don't like what's happening with the action, as I go and look at statistics and I go look what happens typically on Mondays, 71% of the last 52 Mondays over the past year have been green. Worth mentioning. Okay. So Monday is one of the worst days to bet against the market or continuation to the downside. Those are things to consider. You can also see Tuesday and Wednesday, which goes into the Fed meeting. Guess what? Those are our biggest coin flip days. Largest likelihood of downside. Thursday's a lot more largest likelihood of reversal. So again, it's important to understand that going into this coming Wednesday, I don't expect a lot. I don't have big expectations. I don't have anything that I'm really excited about. I'm more of just sitting on the hands, waiting to see what the Fed's going to say and how we're going to attack the market based on what they say. Because they keep coming with a narrative of we need to, cut rates, we need to slow down, we need to help the market. Then yeah, the market's going to thrive. But I'm not going to guess and I'm not going to anticipate crazy things, especially when data's come out so terrible like we just covered. Okay, so now what we're going to do is go over some equities. Hopefully I can get you in and out of here pretty quick. But again, as we look at equities, let's start off with Apple, one of our boys, one of the big boys. Now, you have a lot of supports down here. Between 160 and 168, it's nothing but supports. So be careful, do what you want. Now, in my opinion, it looks like you kind of have been flagging towards the downside. But what I will say is they started buying Darwin AI. Right, this is very interesting. So Apple, they said, you know what, we're getting in on the race. They said we're gonna buy this AI company. We're gonna start spending some of this money instead of the, what's happening with the Apple car, right? So again, Apple may have started to try to find a bottom here. Very interesting. You would like to get above 176 before you start getting aggressive here, but still it looks very good. Or at least, I don't want to say it looks very good, but it looks like it could try to find a bottom here. And it might be time to start grabbing the dip. Now, Google is a good example of this. Google, like you started dipping, and again, buyers just showed back up. Again, it's held up pretty well considering everything else in the market. So again, keep that at the forefront of your mind. Could see a similar type of reaction like Google had with Apple. Again, things to consider. Robinhood. I do want to go over this. I want to go over some of the sketchier names maybe first. Now, Robinhood on the higher time frames, you're still holding above 16.5. You're holding above previous highs here at 17.5. Very strong, very good. My target here on Robinhood, I've been long since 14.5. I think you want to get above 20. Above 20, this could start really road running and getting a lot of momentum. Again, worth mentioning, worth watching. I just want to keep you guys updated. I'm still paying attention to it, but again, we have bigger fish to fry going into this Fed meeting. So again, it's a 20-25 position, so I'm not too worried about it. Meta. So Meta, again, there's a few companies that I think have the hype of buying TikTok. So if you don't know, TikTok's getting banned. Those are things that are taking place right now. I think the two biggest companies that benefit off this are number one, Meta. Obviously, they benefit directly off this. So when this goes to Congress, if it passes, that bill passes, which Biden's already said if it passes, he will sign it. So again, if that happens, you have to like Meta. You have to. Instagram, it will directly benefit. Even Google will benefit with YouTube Shorts. So again, consider it, watch it, be on the lookout. But what I will say from this chart is if you start getting below some of these key levels, you look terrible. So if you start getting below 480, 479, 90, you could start filling the gap back down into 468 quickly in a hurry. So keep that on the top of your watch list because this gets very illiquid very fast. You're almost at bounce or die territory. I said yesterday, said the previous video, whatever it was, below 494, you're bearish. Above it, you look great. So you're below that level. Above that, you're looking for 503. But until then, you got to sit on your hands, wait, be patient. Now, the other company I think it benefits the most out of this too is going to be Microsoft. I like Microsoft. We talked a lot about it. Now, if I go to Microsoft and something like the daily, again, this chart is going to be very reminiscing, okay? So what Microsoft does, this is my opinion, take it however you will. What Microsoft does is it consolidates for a long period of time, and then it breaks out, and then it consolidates again. And it just does the same thing over and over and over and over and over. And that's kind of what Microsoft is doing right now. Nothing crazy, consolidating, it's just there. And again, you try to get that breakout. I solely believe if NQ could have had any type of hold up, any type of sign of strength, I think Microsoft would have continued sprinting towards 440. But I still think Microsoft is really strong. There's a lot of rumors about them trying to buy TikTok as well during this time. I don't know if it makes sense for them, but I think any company would be happy to own TikTok, especially if they are going to sell like the bill does demand. Again, the bill basically says they have to sell TikTok to an American company or they can't do business in America any longer. Okay, so again, Microsoft trying to break back up, trying to do its thing. We'll wait. We'll see what happens. So again, you're trying to break up. Nothing crazy. You know, got to get above 420 and hold. Again, as long as you're in this range, though, you got to be very patient. You can't be very aggressive. I'm not trading the downside on Microsoft. It makes no sense to me. But I am being vigilant. I'm watching for any signs of strength on the indexes because if we do get a bounce, if things go well with FOMC, I do believe Microsoft is the best long opportunity, most bang for your buck, risk to reward, everything along those lines. Be watching it. Now, NVIDIA, AMD, I don't want to spend too much time here. NVIDIA, I think you're just inherently strong. You have that event happening on Monday. So again, not too much going on here. What I would be watching though is this 877 level. It's your line in the sand. You kind of hold it, you wick through it. So that's where we're at right now. But what I will say is on NVIDIA, something that's hard to ignore right now is the clear pennant that you're kind of developing here. Okay. Very difficult to ignore. Okay. You can clearly see what's taking place here. Again, I don't like to just, I hate drawing the triangles for you guys, but y'all do love them. So again, you can see how this is taking place, how you're getting the momentum and you're pinching here. It's interesting. Definitely have to watch it. This meeting goes well. If this event goes well, they're going to move up by themselves. And I think 1,000 is just like a magnet for you at this point. I also think they're really close to splitting as well. If you don't know, NVIDIA ETF just split. So I think it's very close that they're going to split. Last month, Granite Shares, they did a 6-to-1 forward split. So worth mentioning, would be watching. So think about it. Yeah, should be very interesting. Also, too, we will have an interview, just to let you guys know. I'm debating if I'm going to post on this channel or the second channel. But we're going to have an interview with the CEO, the owner of Granite Shares, who does all the ETFs. So it should be a cool interview. We'll have that posted for you as well. AMD. AMD looks fine. You're chilling. Can't really do much. I tried to go long today above 193. You can never just hold above it. You got a few fake breakouts, and you end of the day near 190 here. You can't do nothing. You got a good bounce from our, where we shorted to yesterday, but ultimately that's it right now. Netflix, I like it above 605. It's trying to hold. I hope it can hold, but overall, I'm not a huge fan here right now. I shorted this today. It was one of these shorts I took. Made some money under 615, like I've been saying, down to 605. Made some money. But ultimately now, you're just waiting to see how you react, how things go. Potential double top playing out. If you break below this level right here, it is a major short opportunity. If you break back below 593, clear double top playing out. Break below 593, short it down to 575. An easy play in my opinion there. Nothing to overcomplicate. Amazon, I haven't covered it a lot. It's been inherently very strong. But today, like, you opened up and then you just kind of dropped. So again, you've been in this same range, consolidating sideways. I don't trade below 173.5, not worth it. I do get bearish under 171, but until then, I can't do nothing. So again, you're consolidating sideways, nothing crazy, nothing terrible. Would be watching, would be paying attention. The last names I'm going to go over are going to be crypto names. Coinbase, you're sitting at highs. You got to pull back into 220, 223. That was a nice pullback. You're still making higher lows. You look fine there on Coinbase. MicroStrategy at all-time highs. Nothing to say here. Incredible, simply incredible. Nothing else to say. I don't care about Bitcoin miners. Not a fan. What I will say though, Bitcoin overall opinion here, giving you just quick rundown. I'd like to see Bitcoin back above 69.2. If you can hold above 69.2 on Bitcoin, I think you're very bullish. The end. Now, in between the range of 69 and 64K, I don't really care about what happens here. You want to see you hold above 64K. If you lose 64K, sellers can step in aggressively. Make sure you understand that. I'm still bullish though on Bitcoin. I'll give you another reason why. Ethereum, you're consolidating, you're moving down. You wanted to see us hold like 3,900 for 4,000. You're just not doing it. It sucks. But again, the biggest thing that you guys need to be watching, okay, the biggest thing when it comes to what's happening, okay, is this chart right here. Again, I don't really care what anyone says about Bitcoin. It's topping out. It's this, it's that. I'm a data guy. At the end of the day, I care about what the data tells us. I care about what the data shows us. And to keep it simple, guys, this is all that I care about with Bitcoin right now. Okay, I want to make this really clear so everyone can see it. Each line represents the previous halving. 1, 2, 3. Okay, every time after halving, we've moved sideways, and then we've proceeded to go on a complete bull run. Bull run. Bull run. Now, I'm not saying that we have to go berserk. I'm not saying we have to go crazy. I'm not saying anything's going to happen. But if we go based on statistics, it makes no sense to go short on Bitcoin before halving. It doesn't. Okay? It really makes no sense to go short on Bitcoin even after halving because you have even better runs after that. So again, that's my viewpoint here on Bitcoin. I still think you have lots of room to run. I am not getting involved in this. I still believe when we cut rates, it's going to be bullish for the market, bullish for Bitcoin. I still think in the summer, things could go very well. I think the housing market could pick up if all these things take place. But it's very important that we're paying very close attention to what the Fed says. That's number one. But also, two, I'm not going to go against clear data. And this data is all I need to see. For the past 12, 13 years, Bitcoin goes up. Whenever you have halving, it goes up. You can see the trend. You can see the movement. It is what it is. That's how it operates. I'm not going to be the first one to try to catch the counter trend. Do what you got to do. I'll see you guys on Monday, maybe even Sunday. Have a good one, traders.